Precious Metal Summit 2018 here in Zurich. Welcome, ladies and gentlemen. With me here is now for the first time Avesoro Resources, and Geoff Iyer, who is the CFO of the company, will give us an insight. Geoff, welcome and good morning.
Thank you. Nice to meet you.
Yeah, great to have you here, Avesoro Resources. I just checked a little bit out your presentation and quite impressive what I saw. Maybe you can give us a short insight into the company. Let's say a little bit of an overview before we dive into your production and what's really going on behind the company.
Sure. Okay. We're the seventh largest UK listed gold producer in the UK. Production guidance for this year 220 to 240,000 ounces. We're very much on track to achieve that for the year. We have operations in Liberia and in Burkina Faso. The production is split roughly equally between the two. We've done a great job actually of turning around some of the assets that we've acquired over the last couple of years, and we're now generating significant cash flows, and we're focusing on increasing reserves, pushing out mine life to add additional value to the projects as we move forward.
Okay, fantastic. As we love Africa a lot, we have already interviewed companies like working in Zimbabwe, in Mali, in South Africa, etc. How is it working in Burkina Faso and Liberia? Do you face any challenges? Do you like the environment? Is it mining friendly for you? Yeah,
well, Burkina Faso in particular has a sort of long history of mining, gold and other metals. So we're very comfortable operating in the country. We acquired the Youga mine from Endeavour just a couple of years ago now. So and obviously lots of other companies operating in Burkina. So we're quite comfortable there. Have a good relationship with the local communities and the government, etc. Turning to Liberia, Liberia is a slightly different situation, with the exception of iron ore mining, which it has had historically. Gold mining is a new industry for the country. So we operate the largest commercial gold mine in the country. And there's also another mine called Kikoya, which we own, which is private outside of the public company, which is the only other commercial gold mine in the country. So we're very well established in Liberia, and again have sort of good relationships there also.
Fantastic. You already said the guidance for this year is approximately 230 to 240,000 ounces probably. I saw in your presentation that you started 2016 at 64,000, then you went up over 120,000, 130,000 I think, and now 240. I mean, that's a growth of over 50 to 70% per year. That is amazing. Can you do that again for 2019?
The growth has been phenomenal over the last couple of years, and that's a couple of factors in there. So partly it's been the turnaround of the New Liberty mine in particular, which we acquired. But basically, when we acquired it a couple of years ago, the business was bankrupt. It was losing $88 million a year. We've turned that around in the first half of the year. New Liberty on its own produced around 30 million of cash flow. Wow! So massive turnaround in just sort of 18 months. So that sort of factored through into the production. Then in addition to that, the assets in Burkina that I mentioned, Youga and Balago, which is a sort of the ore from there is transported for processing at Youga. That business was acquired by the public company at the end of December last year. So that's had an effect of both New Liberty turning around and having sort of full profitable production coming from that mine, in addition to basically doubling the size of the public company with the acquisition of the Youga mine. So, and that's contributing around 120,000 ounces of the production for this year as well. So that's why the rate of growth has been so substantial. I think looking forward, we're expecting production levels. We haven't put out the guidance for next year yet, but I think they'll be sort of similar to what we're seeing this year. And we'll be looking at the growth. The growth for the future is around increasing the reserves and pushing out the mine lives of the existing assets that we've got. So organic growth from those, and also looking at M&A opportunities. So we've grown very quickly with M&A, acquiring the controlling stake in New Liberty and acquiring the assets in Burkina. The next step, once we've sort of moved on with the underground study that we're focusing on with New Liberty at the moment, which we're expecting to announce in the first quarter, we're expecting that to have a very positive impact on the value of the business and the share price, and then we'll sort of focus back on M&A, looking at potentially other acquisitions in West Africa, consolidating the space and continuing to grow through that method.
So we would say for the next years probably you're on the path to become a 400,000-500,000 ounces producer probably.
Well, I think that's a potential if we can get another transaction done, which is obviously part of the focus. We think that the business is currently undervalued because of the significant value that will come through from the underground studies that we're planning to put out in the first quarter of next year. I mean, to put it in context, we've got around 170,000 meters of diamond drilling in our exploration plans this year. We think it's one of the biggest, if not the biggest, exploration program in West Africa. And on the back of that, our target is to double the reserves at New Liberty and add another 50% to reserves for the assets in Burkina. So when that flows through into the cash flow models for the business, it should have a very significant positive effect on the value of the company.
Yeah. What would be the mine lives then on the reserve basis?
With what we're expecting in terms of pushing out with New Liberty, that should push New Liberty out to at least 10 years from now. With the
on the reserve basis, of course.
Yeah,
but you have also resources in the backyard,
of
right?
course. But a lot of what we're doing at the moment is relatively low risk. So we're infill drilling. A lot of the increases in reserves is infill drilling resources and converting them into reserves so that we can put them into a mine plan. So it's not greenfield sort of exploration, which is why we're relatively confident of our ability to deliver on the numbers that we're talking about. So that's really the focus. And on the back of that, with the share price coming up and the value of the business sort of being recognised, then we go back to M&A and looking at other acquisitions.
So when we talk about M&A already, you have some targets in the focus?
Yeah, we're looking. Yeah, we're quite active, sort of looking at other opportunities.
But in Africa, right?
Yes.
Would it be in the same countries, let's say Burkina Faso, Liberia, or you would say maybe we are expanding to other jurisdictions in Africa?
We're looking at West Africa and East Africa. We've even looked at some things in sort of Central Asia as well, so or Eastern Europe. But I think that the primary focus for us is Africa, whether it be West Africa or East Africa. There are lots of opportunities there still.
Absolutely.
But we've been very successful with the M&A that we've done so far. We've provided significant returns to shareholders with the transactions that we've done. So, we have to be very careful and very disciplined with the way that we do M&A, because at the end of the day, it boils down to how much is it going to cost to acquire the assets and how much cash are they going to generate and how quickly.
Yeah, exactly. That's always key, not to waste money in M&A.
It's very often in the mining industry, in the resources space, that's where it can go wrong. I mean, there are lots of companies in history that have had good operating performance, and then from a shareholder perspective, the companies have blown it all on poor M&A deals.
Exactly.
And ultimately the shareholders see no return. So we're absolutely focused on ensuring that doesn't happen with us, and that we continue to provide value for shareholders.
Real deep due diligence. That's good. I like that.
Yep.
Coming to your AISC, I was, let's call it a little bit astonished. The guidance was $960 to $1,000 AISC.
Yep.
Can we expect to drop that next year? Because when the produced ounces are going up again?
Yeah, well, one of the factors in the AISC, and again, it comes back to the assets and the history of the assets that we acquired. So specifically with New Liberty, there's a lot of waste stripping that needed to be caught up with because of the financial difficulties that the asset had historically. There's around $150 an ounce within that AISC number that relates to capitalized waste stripping. So that will fall away in around 6-9 months from now. That $150 an ounce in the AISC number will drop away. And so, the life of mine AISC that's within the 43-101 is $750 an ounce.
That's a nice
so we'd expect it
number
to get much nearer to that. I mean, the other thing that could happen at New Liberty with the underground study that we're looking at, if we go underground sooner, the AISC number will drop almost immediately, because we won't need to maintain the stripping ratios if the decision is taken for definite that we're going to go underground. So that AISC number will drop a lot. Obviously, with the gold price having come off in the last sort of 3 or 4 months or so, there's obviously a lot more focus from everybody on the AISC number, because people are obviously looking at the cash margins. Yeah, exactly.
Definitely. So let's put it that way. With that AIC at $750, then even at $1,200 gold, you have a beautiful pre-tax margin, for sure. Yeah. So on the one hand, you are rising your production, then you are bringing up the margin. So rough calculation, I would say you can easily do 80 to 100 million pre-tax profit. That's possible, yeah. So what you going to do with the money? Will you make your shareholders happy, pay a dividend maybe in the future?
Well, a dividend, we are thinking about a dividend. We're still very much in the sort of growth phase with the business though.
Yeah.
So, I think, and this year in particular, although we are generating very good cash from operations, we are reinvesting in the business. So we're reinvesting in the exploration program, this 170,000 meters of drilling that I mentioned.
Yeah.
So we're the capitalized stripping, the waste stripping, which is sort of catching up on the historic sort of underspending. So we're paying down debt this year. We expect to pay down around 40 million of debt.
Then you had 134, I think, right?
Yeah, 134, 135, that's right. So that was at the end of the second half. So we're generating good cash from operations, but it's a period of investment. So reducing the debt in the business, spending significantly on exploration to push out the mine lives, which ultimately there'll be a very quick return for shareholders in terms of the value that it adds compared with the money that's spent. So I think we won't, and I think so. We're not going to sort of like be putting all of the cash onto the balance sheet this year. It's really a year of focus on investment and delivering this sort of underground plan.
It's a bit of transition, I would call it.
Yeah, exactly. But I think as we sort of look forward into 2019 and beyond, that's where we sort of start to generate the significant cash, keep it on the balance sheet, maybe get another transaction acquisition sort of done during the course of next year. And I think then with another mine in the portfolio, 500,000 ounces of production, that's when we start to think about paying a dividend.
I think that's a great game plan.
Yeah.
Well, thank you very much for the interview. Really like what I heard, and all the best for you. And make sure that the due diligence is really deep enough, because, as you said, a lot of deals were, let's call it nicely strange, destroying a lot of shareholder capital. But it looks like you are really on the growth path on the one hand. On the other hand, you are reducing costs. That's what we want to see.
Yeah, we're a very strong technical team. So,
that's also important.
Exactly.
Super. Thank you very much.
Nice.
Ladies and gentlemen, that was Gio Fire, the CFO of Avesoro Resources. And you heard it, an African gold producer out of Liberia and Burkina Faso. And for this year, they planned around the 230,000, 240,000 ounces of gold. Next year, they want to raise that significantly again. And don't forget, the company just grew from 2016 with 64,000 ounces now to 240,000 ounces. And also the AISC will go down significantly within the next 6 to 9 months. So the margin is going up, the ounces are still going up, the company is generating a lot of cash. And what we also like is paying back $40 million of debt. That's always good to de-risk the company. So check out the company. Thanks for watching us. Bye-bye from Zurich.